Good evening, everyone. Welcome to tonight's program. My name is David Matney with Nebraska Realty, and tonight we're going to talk all things USDA loans. I have an expert for tonight as our guest, a fellow by the name of Paul Kottich, and I'm going to bring Paul on. And if you can hear me okay, if there's anybody out there in the chat, let us know in the chat that you can hear us okay. All right, and I'll bring Paul to the stage. Hey, Paul, how you doing?
Hi, David. How are you?
I'm doing great. Hey, thanks for joining us tonight. I'm excited to learn about USDA loan programs and all that's available there. And we do have somebody. All right, Zaretha is in the house tonight. All right,
cool.
Zaretha, welcome to the program. All right, terrific. All right, excellent. Well, Paul, if you don't mind, kind of introduce yourself. Tell us a little about yourself and how long you've been doing this crazy business and a little bit about Charter West and all that sort of thing.
Paul Kottich, I've lived here all my life. I am a South Omaha boy, an SOB, some of us will call us, but South Omaha boy. And I've been in the mortgage business 18 years now.
Wow.
Everything in Omaha. So I've seen a few ups and downs, just like you have, Dave. So
exactly.
Went to Charter. Joined Charter West a little over a year ago.
Okay.
And, it's a nice bank. It's a Nebraska bank owned. Started in Pender. Our main office is up there in West Point. We're in 33 different cities in this town. We have 33 offices spread across all the way to North Platte, which I know the one is going to be in Scottsbluff soon, up Wayne, Norfolk, and Lincoln and stuff like that. So been around. We do loans in all 50 states.
Okay.
Wow. Federally charted. Okay. So we can do that. And we do all the loans, conventional, FHA, VA, USDA. We are the largest provider of NIFA, first-time home buyer loans in the state.
Okay.
We are newly minted to that. And we do all our own underwriting. We don't farm that out. And all that's all in-house, all right there. So
nice
for the customers. If I have questions, underwriting and management and help are just right out my door and down the hall.
Nice. That's nice. Yeah.
We get quick answers.
Great. Now, Paul, tell us a little bit, what is the USDA loan program and who is it designed for?
USDA loan program is designed for everybody. It's not just a rural. It is backed through the Rural Housing Division of the United States Department of Agriculture, USDA. So they're eligible to millions of people, and to be primary homeowners. Investment buyers cannot use it, and nor for second homes or anything like that. So, but it's designed for low to moderate incomes and people with scarce funds to pay, like down payment and things like that. So
gotcha.
That's what it's designed for. And the features of it is to help people in rural areas of moderate income and to buy. And rural area doesn't necessarily mean it's a farm or anything like that. As we were talking earlier, you can go on there in Gretna. You can go and put homes. You can use USDA in Gretna. You can use it in Springfield, some of the little cities outside of Omaha and in the major metropolitan areas. So that website there, you can go on there and you can just put your address in there. Or put the city in there, but if you have a property address, you can put it in there, and it'll tell you if your property is eligible for a USDA loan.
Gotcha. Well, with the way Gretna is growing, boy,
might not be long.
They may not be able to. They might have to update that map because I tell you what, Gretna is going crazy. No, that. Now, how is USDA different from FHA or VA or conventional loans?
It kind of mirrors all three of them.
Okay.
But the one thing, it is close to a VA because there's only two kinds of loans. You can put zero down payment, USDA and VA. So that gives you zero down payment, which that for some people is very, very nice. Yep. They seem, conventional, you can get down to 3%. FHA is 3.5%. So zero is pretty attractive for people with moderate income and maybe not a lot of assets to buy the house. So that's one of the biggest, that zero down payment. There are other things with it. It also has a upfront mortgage insurance like FHA, and it also has a monthly like FHA.
Okay.
And it's a small little percent, 1% of the the sales price. You add that back on the loan and spread it out over 30 years, and then there's a small monthly, which goes for the life of the loan. That's to insure it in case of default. And much like FHA has an upfront of 1.75 and 0.55, VA has an upfront of 2.5, and they put it on there. And conventional, you have a monthly mortgage insurance period. So it kind of mirrors all of them in that way. But the big benefit is zero down. Usually, along with FHA and VA, it has a lower interest rate than conventional to help people get in there. So,
gotcha. And you mentioned something about income limits. So it's designed, you can only make so much money. Is that correct?
Yeah, it's designed for low and moderate income, which means the AMI, that's the average monthly income in a county.
Okay.
It can be 115% of that. So I looked up Douglas County earlier, and a household family, husband and wife, making $126,000 a year. Over that, they'll probably be ineligible. Under it, you're eligible for zero down financing from USDA if it's in their area.
Okay, so things have to line up. You can only make so much money, and it has to be a rural area.
And the other part, well, not rural. I don't color most of Western Douglas County rural and all that. But that's what people think. It's only for your rural, and it's not.
Gotcha. Right.
It just has the limit in there, and that's why you on that same website you can put in an address and find out if it's in the limits. So that's why some places in Gretna you can do that. Some places in Southern Papillion you can, probably south of 370. We were just talking earlier about up in Blair or just north of Bennington, off of 36 in that area too. Arlington up there in the northwest corner of the county in that area. Waterloo Valley, in there, and in southern part, Springfield, which is still, I think that's in Sarpy, but that kind of area. So you can be close to the city and have it done. You just can't get in the city, and that's why they're doing that. You can look it up and see, right? I can look it up.
Gotcha.
And tell you. So
okay. And then what about? What about we got Clark in the house. Hey, Clark, how we doing? All right. And MH08 is here. So, all right. David has the best guest. Thanks for coming in tonight. Okay, Paul. All right. Awesome.
Thanks for being here and listening.
All right. Arnold, Nebraska. I don't know where that's at.
That's out. I want to say it's west of Ord.
Okay, I'm going to type that into the thing and see what, let's see, Arnold, Nebraska, go. And looks like that is eligible, isn't it?
Definitely eligible, yes.
Yeah. I'm one of those folks that, it's way back. It's way out there in the.
It's out there.
Yeah. 35, he says 35 miles north of.
Yeah.
All right.
That's a very pretty area, though. If you've never been out there, you should make a point of going there. It doesn't look like eastern Nebraska.
Right. I went up to up by Valentine, did one of the canoe trips up there by the Niobrara, and that's really beautiful. And let's see. Clark has a question here. What is the difference between a direct and guarantee USDA loan?
Those are two different programs, and they have two different little qualifying. I'm not real sure as far as I do the guarantee. The direct is what we usually do.
Okay.
The guarantee is a whole nother ball game. So
Gotcha.
most all of it's done direct, and so I'd have to do an awful looking up for that. But we just do the direct.
Okay. And Clark is from Atlanta, Georgia, and Clark is really close to 1,000 subs. Clark, have you broken that 1,000 sub mark yet? Let's see if he's got to be real close. A couple days ago, he was only eight people away, but What are the main benefits of a USDA loan, Paul?
Well, one, it's helping if you have a low income
Mm-hmm.
to get in there, and the zero down payment. That down payment can, when you're a moderate income, it's
Right.
hard to save all
Yep.
that kind of money and to do that. Now, one of the other benefits though is even though you might have your down payment, you don't need a down payment, but all your closing costs and things like that can be by the seller, and there can be gifts from mom, dad, grandma, grandpa, relative, brother, sister, and all that. So
Okay.
if for some of the closing costs in escrows for taxes and insurance and things like that can be as high as down payment, that stuff can be a gift.
Right. I mean,
And
especially if they can get in there and have someone pay their closing costs.
well, and I also, if they're a first-time home buyer, I have paired a USD loan with a NIFA
Oh, wow.
HUBA,
Oh,
which is for home
okay.
buyers assistance, which is a second loan to help them with the closing costs up to 5% of the sales price. So if it's a $200,000 house, that's
Right.
$10,000 they can get in that second at 1% interest for 10 years.
I did not know that.
And they can buy this house at zero down and have that extra little payment there to cover closing costs and escrows and prepays.
Wow.
Basically, they may be able to get into that house for $1,000.
Is that right?
Yes.
Wow. Okay, so I did not know that you could pair.
That's a lot. That's a lot of stuff going on top of there.
Yeah.
It can be done, and I have done it a few times. So
Okay. Now, does it take longer to close than a
USDA, I would suggest that anybody it's got to go through our underwriting, and it's got to go through USDA underwriting, which means government underwriting.
Mm-hmm.
Sometimes they're a little slow. I always tell agents, if you're looking at that, let's plan for a 45-day or 60-day close.
Gotcha. Okay.
Because I know I can get my stuff ready to go inside of 30 days.
Right.
I cannot guarantee that the USDA will get to it and look at it and get it to them. And there is no phone call you can make to them that will help them along any quicker than they
right. They move at the speed of government.
It's underwritten in state of Nebraska in Lincoln, but
Okay.
it's a smaller staff.
Gotcha.
And so they're doing the entire state. So they might be 4 underwriters, and I got 10 to 15. So I mean, but I would say 45 or 60 days, which is really not that long to get all your ducks in a row.
Right, but I mean, if you got with no down payment, and then if you got help with HUBA with,
wouldn't you wait for it?
Yeah, I mean that is a great opportunity, But people, I'm one of those folks that still believe in the fact that even though you can get into something with $1,000 down, you got to have more saved back in reserve for when life happens.
Yeah, and they're going to tell you they probably want to have 2 months reserve. So if you've got a $1,500 a month payment, you need $3,000 in reserves, and a lot of those people have it in their 401k.
Okay,
you count that as a reserve.
Gotcha. Okay. Now, what about credit score wise? What about credit score? What kind of credit do you have to? How does that work?
It really gets down to when you put it into their underwriting, GUS we call it.
Okay.
That'll tell you. But I would say the main stem would be 640.
640. Okay.
Right. And then the other part of that equation is the debt to income ratio.
Okay.
If you're at 640, you can't be over 45. And what's that mean to everybody?
Okay.
If you add up what we estimate your monthly payment's going to be on this house, plus all your minimum payments from your credit report,
okay,
divide that by your gross, that gives me a debt to income ratio. And 45 is a hard threshold with USDA. If you have a 660 credit score, you probably could go 50 with NIFA, but USDA on its own, it's pretty hardcore that you're 45 to qualify on that. So, we work with people sometimes if they're a little over. Can we pay something down? Can we pay something off? I mean, that can get there. But if it's below 620, or FHA and some of them will go that, but USDA, it's kind of just like NIFA. It's a hard 640.
Okay, gotcha.
You're in there, and usually experiences if you're a sub 600, you got some issues. It's going to take a long time to get cleared up to get up higher. It's not that you're a bad person or anything like that.
Right.
Bad things happen to good people. Life happens. It just gets harder to climb out of that hole. And so, but 640 is pretty attainable if you maintain your paying your bills on time and not overdoing it.
Gotcha. Okay. And then what about household size limits? Is there anything in terms of household size wise?
Well, you get a child care credit. So
Okay.
I put in there, but no, there's no household size in there. We put it's if you have a husband and wife both working. Well, we got to use that income.
Okay.
But if you have 3 or 4 kids, help yourself to happiness. I mean, that's
gotcha.
But if you got in daycare, then okay. So how much daycare are you paying a month while you work? And that gives that gives you some credit. So if you're at the threshold of 126 and you got 2 kids and you got $1,000, that's $2,000, $1,000 kid, or that I can take that down to where you could be underneath the threshold. So
gotcha. Now, what about, this might get really tricky. What about self-employed folks or people with like a non-traditional income? How can they qualify for a
self-employed can qualify?
Okay.
Like all the other loans. Non-traditional, there's some hoops there, but you can carry there. But right now, the non-permanent resident aliens, that's all in a uproar of not being done.
Gotcha. Yep. Okay.
Unless it's a straight conventional, but FHA has put a hold on that, and and there's not many non-resident aliens that are VA eligible because they haven't served in the service.
Right.
That's a little tough, but self-employed, yes.
Okay. And that can be really tricky for folks. Can you talk a little bit about folks that are self-employed as far as any?
You're going to want a 2-year tax return in your business. So if you're sole proprietorship, you got 2 years. If you're an LLC or sub S, you're going to have a K1. If you're a corporation, you're probably making too much money to qualify for a USDA.
Okay.
Or too many there. So, but if you're a loan officer or a realtor, and you got to have 2 years tax returns filed, and you can't just do your 20. If you haven't done your 2024 and filed it, you're only using 22 and 23, and so I get people says, "Well, I got it done." I said, "Have you filed yet?" No. Do you owe? Yes. Did you pay? No. Well, you better get a payment plan, and then we can use that. So that's some answers. But if you just don't do your taxes, I don't have much to get you, sir.
Okay. MH08 says daycare kids should be out in the fields.
Well, they probably will be before much time if you've ever been in a rural community. And my father's from a rural community, and I baled my hay and scooped my manure. I know what, and fed cattle and milk cow. I know what that is. So everybody should do that for one summer in their life.
Right. Now, what about are there any limits on the price or type of home you can buy?
No. You can do manufactured homes because there are a lot of manufactured homes in rural Nebraska or rural anywhere. So there's the same caveats on that. Double wides, they got to be titled correctly, and you got to have the HUD plates on both units, and to make sure, because manufactured homes are actually vehicles that have been towed here. They come here as cars or trucks registered, and then they got to be turned into real property at the county. Some people forget to do that, and and even though they're paying taxes on it, they haven't registered it real property, which means you got to get your motor vehicle out of motor vehicle registration and into the home.
Okay.
So I can do that. So, but stick homes, I have done a metal home out north of Carroll, Nebraska. out by Grand Island, and they're just like stick homes. They just use metal for the siding and the roofs and the 2x4s and all that.
Right.
Still had drywall, plaster, and all that and stuff there. Beautiful home, but it's wind resistance 11%. Right. So we can do that. I can't tell you about earth homes because I've never seen one come through. There's many of them around here.
Right.
Every now and then a blurb comes by about an earth home, and I'm going, okay, USDA may do them, but there isn't a investor out there who wants to buy it.
Right. So, now, what about, can you buy a fixer-upper, or does the home have to be move-in ready? How does that work? Is it kind of like FHA and VA in terms of
you can't have an investment property. So if it's a fixer-upper, it all depends upon the appraisal. If the appraisal comes back and says this is not there, this has got to be, or it's a hazard, that's going to have to be done. So
gotcha.
It's not really designed to be a fixer-upper. You're going to have to be but it doesn't have to be pristine. It's just got to be safe.
Okay. Now, do they call out things like peeling paint, things like that? The peeling, the handrails, all that sort of thing. So
handrails, if they're if the step is, if you're off on either side of it, it's more than 36 inches, you need handrails. Gotcha. If you're got peeling paint and it's definitely older than 78, it's got lead paint. But even if it is older and it's peeling, they're probably going to call for it because a little child can come by there and pick up peeling paint and get sick. So that's a hazard. If the seller is not willing to do all that, they're not going to sell their house unless it's to a cash buyer, and they won't sell it for their premium dollars.
Okay.
Because that stuff will have to be done. The roof, if it's more than more than 3 years old, to that kind of a thing, roofs are getting to be real sticky now. So if it's more than 10 years old, the appraiser's not going to call you on it, but you might have a hard time getting insurance on it.
Right. Yeah, so, that's a real headache right now.
And the insurance agent, even outside, they're going to go out there and look at the house.
Okay.
Especially if it's an older one, and they're going to pull out some stuff. Well, we know this. I had a gentleman. They had kind of a greenhouse back there attached to the garage.
Yeah.
But it was like anything. Well, there was a storm cellar that had been covered up and stuff. So what's in here? The owner didn't know. He said, I've never looked at it. So well, there were some issues. So,
right.
But if your answer your question, fixer-upper, I'd say no.
Okay.
No, it's not designed for fixer-upper because remember, moderate to low income, they don't have extra money to do fix-ups.
Right.
It'd take a long time. So it's got to be pretty close to move-in ready.
Okay.
I mean, if it's got decent carpet, but it can get some.
Okay. Clark has a question here. What documentation will I need to provide for a USDA loan? You might have talked about this already, but good reminder of what folks need for documentation. Paul,
whether it's USDA, conventional, FHA, or VA, I need the last 30 days pay stubs.
Okay.
Last 2 years W-2s, last 2 years tax returns, the last 60 days checking savings accounts, and the last either quarter or the last month of any 401k retirement plans, those kind of things, driver's license copies.
Okay.
And my underwriters will always throw up something else in there, because if they look at your at your bank statement and all of a sudden you have large deposits in there, they're going to ask, where'd those come from?
Right.
You're going to ask, well, why do you care? And he says, I don't care. The government says, Anti-Money Laundering Act says we have to document any and all large deposits. Where did it come from? Is it drug money?
Right.
So that's what we got to do. I don't care what you get a $10,000 deposit in there, but the government does, and they want to know about it, and we have to report it, and we have to document that. So those are what we need.
So they call that seasoning. Is it the funds have to be seasoned? Is that right?
60 days. That's why we go back 60 days. So if you have a bank statement that ends on May 25th, and you got a bank statement that ends on April 25th, anything past March 25th, I don't care about.
Gotcha. Okay.
So because your April is going to show the last 30 days back to March, and your May is going to show the back to April. So I need anything like that. And if you're closing in the middle of June, we're going to ask you for a bank statement or a transaction history to date to make sure you don't have more deposits in there that we didn't see. So
Right.
that's the kind of stuff. But those are the things we need, and those are the kind of things we ask on the application. You're going to give permission to pull a credit report. They pull all three of them. They use the middle score as the average. If you go get a car loan or something like that, they're usually only paying one. And we pull a 3 bureau, and mortgage scoring is much stringent and harder than a car or something like that. So if you go to Credit Karma and you've got this fantastic score, and then my score comes out a lot lower, don't get mad at me. That's Credit Karma is just pulling 1 bureau. It's a very general credit scale. There's 33 different algorithms that score them, and mortgages have the stringentest one. So, but the wonderful thing at our disposal, and most of us do, is if you have credit issues or some things that show up that you didn't know about, or you knew were there, collections and other things, that don't hide. Let us know. Right. There are ways to come around those. Maybe I get to run a what if with the credit bureaus, and it'll come back and tell me how many points you can get to increase your score and how long it'll take if you do those. Usually it requires paying down your debt. You got a credit card, you have $1,000 limit, you owe $900, and you only have $100 open. That's going to lower your score. You pay it down to $300, and then next thing you know, your score's gone up 20 points or so.
Gotcha. And that's why it's important for folks to reach out to you early so you can start making course corrections and not,
here's the deal.
Until you find a house you like. I mean,
the more information you know, the better decisions you make and the more comfortable you are with those decisions. And you're talking about a very large purchase that don't go in there and don't be afraid of it. If you won't be afraid once you know.
Right. Exactly.
Good, bad, or indifferent. And most of us always, we lead you something that say, okay, if you can do this and this, and it might take 6 months, it might take only 3 months, but you got a plan. And if you work it, you can get into a house.
Excellent. Let's see. MH08 says, my homeowners is due June 1st. Talked to my agent today about renewals. She told me sometime in the future they won't be covering roofs 100%. So yeah, I can.
Yeah, that's what I've been hearing too. Is well, they're going to downgrade them for the age of the roof. So they're going to depreciate them, and they're only going to pay you for the value at that point. So if you got a new $10,000 roof 5 years from now, to replace it's going to cost you 12, but if it's damaged, they're only going to give you 7 or something like that.
Oh yeah, that's
so that's a tough.
Okay. Monica Wharton, welcome to the show. Well, Monica, she says, I want to apply a retired senior on SSA, I believe, and then then I would say reach out to Paul, correct?
Yeah. Yeah, I mean, your SSA, that's income we can use.
Okay, excellent. All right. And then she has another question here. What areas offer USDA? We can pull up that map here. Monica,
what city does she live in, Monica?
Or what city are you interested in? We can type that into this. Let's see here. And then she says, last year I qualified for FHA first time loan. I think 101,000 maybe. Okay. Let's see. Tampa, but to move to Tampa now. I wonder if that's just Tampa now, but we'll move. Okay. Are you moving to Nebraska, Monica? And I'll leave a link to this. Let's see if I can pull that. Let's see if I can.
Dave?
That. Yeah.
USDA is nationwide, so every state.
Gotcha. Okay. Yep. Maybe. Okay. So yeah, she can. Let's see if I can put this in a chat here. See if I can put that in the chat. let's see. There's the I'll leave that in the chat, and I'll leave that a link in the thing there. Okay. And then she says she's maybe moving to Nebraska. All right, terrific.
All right. We need more taxpayers.
We do. We do. Yeah, USDA is nationwide. So
you'll love it here. You'll love it.
I'm hoping to move out of Florida this year to a rural area with some land around me. Okay.
We got it. We got plenty of land.
We got plenty of that. We got plenty of that. Yep. And what about new construction? Is there any issues with new construction? Is that fine?
You can do new construction.
Okay. And then you've kind of talked about that. How long does it take to close on a USDA loan? You need about 60 days on that.
I would tell everybody if I've pre-approved you, which means I've also run it through USDA's automated underwriting, and it comes back and says what you have told us is correct, and I'm not going to put it in there unless I have your bank statements, pay stubs, and all that information that's pertinent. Then I think you definitely can get a 45-day. But I'd rather err on the caution and say 60 days. If you're going to tell me you want to do it in 3 weeks, I could get that done, but USDA probably will not.
Yeah.
So why chance it? Give yourself plenty of time. Again, the more information you know and you got all your ducks in a row, the easier it is and less stressful. So that's why we're here.
Gotcha.
It's the same with the more information you give Dave, he can find the right property.
Exactly. And Monica wants to know how to reach you. You can reach out to Paul's number down at the bottom, the 402-490-2550, or you can shoot him an email at Kottich at charterwest.com. Is that correct?
Yes.
Okay. So
Monica, give me a little explanation, Monica, about that. We talked on the phone on the Dave Matney show, and we'll you're watching the rock star Dave Matney, so I'll know who it is then. So we'll try and give you some answers.
All right, that's great. Okay, let's see here. Let's go back to our comments here. She says, okay, she says thanks. All right, terrific. Well, thanks for joining us tonight,
Monica.
But yeah, you can check out that website there for eligibility. And like I said, just reach out to Paul on that. Paul, what do you think are the biggest misconceptions or the most common myth or misconception about USDA loans?
Well, that they're only for farmers and ranchers. Now, there's a division of that does that, but it's, you have to be in a rural, so you have to be in a farm community. And that's not true. You can be close to a metro area. Right. Or a town like Fremont. You can't do it in Fremont, but anything that's outside of that, or Gretna, anything that's outside of Gretna, actually some of it inside Gretna. So that's why we have the property lookup to tell you, is that area eligible? And when you and I were talking earlier before the show about Bennington at Highway 38-6 over there, Bennington south of that is not eligible. But on the north side of that highway is, and that's where that house was, and we could do a loan on it. So that was it can be done. It's just this misconception is it's another government entity, and it is, but it's created for development of rural areas, and just because you're on the fringe of a city doesn't mean you're still not eligible.
Right. I mean, let's see. Clark says, are there any other assistance programs a person might qualify in addition to the USDA loan? And you kind of talk about that already, Paul.
Well, in our state and other states, there's the Nebraska Investment Finance Authority is a tax-exempt bond fund that's established for first-time home buyers. And they do have another part of that for existing home buyers, but I just want to talk about the first-time home buyer. And that has that home buyer's assistance loan on there to help you with costs, down payment and closing costs. So there you go, right there. So that can be I can use the NIFA with a conventional loan, an FHA loan, VA loan, or a USDA loan, of which I talked about an example earlier.
Yeah, that's amazing to me.
With the HUBA, and that's a lot of acronyms. FHA, USDA, NIFA,
Yeah.
HUBA. So, and remember, those are all separate information things that had to be vetted.
Right.
So, a skilled craftsman I was that time.
Well, and then here's the, here's what the best way is just to do that. That's all you need to know is just know the number. You know what I mean? Give you a call.
Yeah.
And
yeah, mostly. I mean, some people, you had a question about red flags.
Mm-hmm.
If there's the same red flags with USDA as there would be if I were doing conventional FHA or VA, income, debt to income ratio, credit scores, all of those are things that we take into consideration to see if you're eligible and to afford and get a home loan. So all in varying different degrees, and that's my job to vet those out for you and tell you this is where you should go or not go, and it's driven by three things. I say your credit score, FICO scores, that debt to income ratio. Can you afford this house along with your other debts? And then where's your money to close going to come from? With the USDA, I've taken that out of there. It's zero. So now you're talking about closing costs, which on an average loan could run $3,000. Just processing, underwriting, title insurance to make sure. That's a whole nother ballgame and another show that David could do. But to make sure that you do that, the appraisal, and then taxes and insurance to go into your payment to make those payments for you. Because if you're only putting zero down, you're required to have an escrow account. If you're only putting 5% down, you're required. 20% gets you out of that. But all the other ones are going to require you to put an escrow down. So even VA, and I've had some people doing a VA loan, and you still got to put an escrow down. So they want to make sure your house is insured, and they want to make sure your taxes are paid. So those are the things you got to pay. So the red flags are pretty much the same for all of those, and they have to deal with credit scores, debt to income ratio, and your funds to close.
Gotcha. Paul, what do you see right now in our current market that mistakes that people make that in terms of their obtaining their financing? What do you think is the biggest mistake you see among first-time home buyers when they're applying for financing? What can you shed any light on that?
The hard part is our high schools and even our colleges, they don't teach personal finance. They teach business classes, of which I took them and you took them, but they don't teach personal finance. Unless your mom and dad made you get a checking account, the old-fashioned checking account. Now it's all Venmo, but I remember having to balance my monthly bank statement for my checking account, and it would never balance, and I'd get all that stuff. And then I started realizing, 10 cents or $1 or $2, I don't care if it bounces, because I don't have to report to anybody but me.
I attended the Ralph Matney School of Finance for 18 years.
I look at my statements and I make sure my money's there, and I want to check what's going in and what's going out, but I don't bounce. But that's kind of the young people, you just don't use that debit card. It has a limit. Everybody says it does. It has a limit. What's left in your account, checking is what's there. And all of a sudden, well, I don't have that much money this month, so I'm going to go put it on my credit card because I don't have it. But do you need it?
Right.
That's a
good point. I mean, because
that's all stuff that I get credit cards or people that the one now is because they went and bought a new car.
Oh.
And now on a new car, you're going to have a $500 or $550 payment. I says, well, what did you get? And I says, well, I got a 25 Kia or something like that. I says, did you need to buy a 2025 Kia? Could you not have bought a 2021 Kia? And now you would have only had a payment of $375.
Right.
And they go, well, I like a brand new car. I says, well, you can get a used car that's just as, look at the certifieds. I mean, I see that all the time, and that's fine. They can afford it. Can't afford a house.
Yeah, no,
So and affordability in the house, I look at how much are you paying for rent. If you're paying $1,500 a month in rent, you can buy a house for $1,700, $1,800
right.
a month.
Yeah.
Because you're getting something. When your rent's giving you zero return on your money.
Yeah, no. Clark says, sorry, I was on the phone with a client missing some of the information. That's okay, Clark. You're entitled to sell a home. So Emily says, tell them you're on a very important call with Omaha. So,
You can go back on YouTube and rewatch this, Clark. Can't
right,
they?
right. You gotta take care of your client.
Yeah, if somebody's calling me and wanting a loan, see you, Dave. Goodbye. You're on your own.
We'll have to wait until after the show. What advice do you give to buyers who are unsure if they qualify for USDA loans?
Don't be afraid. Fill out the application. Call me.
Gotcha. Yeah.
Don't be afraid because you don't know. And don't assume that you won't qualify or I can't ever buy a house. I did a house for a lady who was 62 years old.
Okay.
First home she'd ever bought. She was so happy. She never thought she could have bought one. And we were talking. She was sent to me by her daughter.
Yeah.
And said, well, would you go, you should go talk to Paul.
Right.
Yeah. I said, and her credit was good. Not great, but it was good. Right. She did an FHA loan and she had the down payment money and it wasn't an exuberant home. It was a decent home price and everything else. And she got into it and she is very, very happy.
Great. That's awesome.
I like that story. I like that a lot. It makes me feel good.
Yeah.
The only bad part I feel is she waited till she was 62 before she decided.
Yeah. And yeah, I think that's,
so even if it's bad news, like I'm going to tell you, if you got a loan office you talk to and they don't give you any indication of how and when you can, then seek another one.
Right.
But if I can't do it now, I want to do it in the future. I don't get paid until I can help you. So if I give you a plan or tell you if you do this and this, then come back, and you do it, and it's not 100% it works out, but most of the time it does. Okay, now we can get you a house.
Well, and I think that's the thing too, is I think people are afraid to reach out. And then if they reach out and then they can get put on the right glide path.
Yeah.
I think that's so important because I think a lot of people are, they might have that misconception that you need 20% down, or home ownership is so unattainable. But I
had a ding on my credit score, and I had some issues. Well, I can tell you, this is a story that I had a doctor that had 3 condos in 3 different cities that he lived in and bought, and he was coming here to work at the UMC, and he wanted to buy this $850,000 house. He makes $450,000 a year. Wow. Has these 3 condos. His credit score was basically like low 600s.
Wow.
How the hell does this happen? I look in there. So he's got 3 condos.
Right.
That's 12 months worth of payments. That's 36 months of payments in 1 year. He was behind on 18 of them.
Oh, geez.
And I'm going, how did you do that? He says, well, I've been moving around a little bit. So I says, your tax return shows you make income on those. You have a debt to pay on those. How can you forgot?
I
don't want you operating on me. So I said, paying a company to pay your debts, to manage your money. It doesn't. Yeah. All walks of life get into trouble every now and then, and for whatever reasons.
Yeah, I'm not sure if I say that correctly. I'm not sure. ECROS or something like that. Lots of additional house expenses on a house compared to renting. Sometimes it's a liquidity issue, and that's true. Homeownership is not for everybody. You got to go into it with a long-term outlook. And
my question there is, yes, there are additional rents on a rent, and sometimes that house needs it. Do you have your landlord that's ready to fix all that stuff and fix it up?
Yeah, that's true. Yeah.
And if he's not, then you're powerless to do with it. If you own it, you can fix it up.
That's right. That's true. Yeah.
So yes, living and renting is expensive too.
Yeah.
But you got no return on your money, zero.
Right. Probably the best of all worlds is being young and living with your parents.
Remember, I'm an SOB from South Omaha. That wasn't an option for only so long.
Well, and then if you're young, if you're young and you start working, and then if you can build that habit of saving, and it was pounded into my head when I was growing up, that you had to take care of your credit. My parents were so adamant about that, because if you take care of your credit, you have freedom, because you can get a loan. And
Be mindful of what you do with your money and where it's going, and how you're handling it. And if it's not there, I spent many a Saturday night at home with some kind of a box hamburger helper. They still sell hamburger helper. I know. I see in the store. So.
Well, here's the other thing too. You can always get a second job too. I mean, when I was going to college, I was working two jobs, and I was mowing grass, and then I was also working at a hospital, and then
I didn't have enough money to go to the bar. But if I was working the door, I could go to the bar. So I got the best of both worlds.
that commercial that it says, like, now you become your parents. That guy, is it the progressive guy that's like, now
Yeah, something like that. Yeah.
My wife we'd go out, and I was kind of that guy when I was young. We'd go to a bar, and I'd be like, I wonder how much money this place makes. She didn't want. She's like, oh, please, will you please be quiet? So she did. Once you get MHOH says, once you get your credit cleaned up, your score goes up. You're pretty fast after that.
It can, yes.
Yep.
Yeah. It can.
And if you don't do things right, it can go back. It can go south in a hurry too, can it?
Yeah. Sometimes you got a good score, and people say, well, I just bought something, or I opened up a new credit score or credit card. Your score will go down.
Right.
Until you have done something with it, put something on it, and you've made one payment. And then, so that might take 60 days, and then it's going to start going back up again, as long as you're making payments on there and you're not filling the card to the brim. So, yeah, opening new credit, your score goes down.
Yeah.
So you've proven that you can manage that debt.
Well, and think about the folks that, I've always been a person that you paid off your credit card each month, and the people that have, I would love to own a credit card company where you're getting that kind of an interest rate. I mean, that talk about.
I think Nebraska Furniture Mart is a furniture store.
Yeah, yeah, exactly.
It's a bank that has furniture in its lobbies. At 19 and 20%, most of the credit cards now are 24 and up. So
yeah,
Nebraska Furniture Mart is a bank with furniture in their
That's
lobby.
a great point. That is a great, and no wonder Warren Buffett owns it, because it's like that. That is a bank. Yeah, that absolutely. That is
the return on investment there is huge.
Yeah, I mean, because it's MOH says, yep, got my water heater replaced in 3 days. Also, you learn how to do things. YouTube is a wealth of homeowner information. Amen. Yeah, you can learn a lot from YouTube. It's kind of amazing. So yeah, that you could learn how to do YouTube from YouTube.
Oh yeah, Dave. Okay.
You can, but you got to vet that information too. You got to watch 4 or 5 videos and get the straight scoop. Hopefully, But yeah, that's a great point. Let's see if what else do we have here. What's one tip you would give a first-time home buyer considering USDA financing?
Is it okay for you to live not necessarily in town, but a little bit away from the action? Like, I have a young man that I just going to do his loan, and he bought he lives here in Omaha, but he was buying a house in Arlington.
Okay.
So, but he had no problem with driving into Omaha to wherever he needs to go. So
Right.
You know, there's a distance thing there where some of us, you know, I just want to drive down the street to McDonald's as
Right.
opposed to, well, I don't want to go 10 minutes away to get to McDonald's. So,
Right.
or, you know, if you're a tinker around the house, you better, when you go to the hardware store, you better have everything that you need and want because if you miss something, it's a long ways to go back sometimes.
Right. And just looking at this map, you see that, you look at places like Louisville and Plattsmouth, those are eligible.
Springfield,
Springfield,
right
yeah.
in there.
Ashland,
Greenwood, down that way. All of those, Utan out there, Meade.
Right.
And now that Omaha's really kind of grown out there, I mean, it's not that hard to get into where you want to go and do. So,
right now it's amazing it's amazing to see how much Omaha has grown just in the past 5 years.
Oh, definitely. I mean, it's huge.
It's
not slowing down if you look at all the construction plots that are going out there with the new construction homes.
Well, and now that we're over 1 million too, and there's a lot of things going on in the city, and I think it's some pretty. And I don't know about you, but I can tell a difference in traffic. Can't you?
Yeah, I was down South Omaha, and I tried to come all the way out to West Omaha, and I was like, I should have left an hour ago before I came out here because I'm sitting there in traffic and I'm going, oh, I don't like this. So I especially around 120th and Center, it was like, are you kidding me? What they're seeing, that's a congested area where there's a light about every block and a half or 4 blocks. Right. You got to have in there. So I know that. So, you got plan your timing out is the one thing, because I just as well lived in Springfield and came into town because it took me that much time just to get home.
Right. Well, my sister used to live in Louisville, and boy, I tell you what,
great little community.
Highway 50, boy, that has changed.
That's a busy place now.
I mean, yeah, that is. Remember when that was just two lanes and a bunch of farm ground in between?
Yeah.
Now it's just out there today, and it's amazing. MH08 says, as I told my plumber, I watched 3 videos now, so I'm an expert. He got the joke. All right. And then he says, I remember when Omaha ended at 120th Street. Yeah.
I remember when it ended at 50th Street.
Wow. Okay.
I lived on 42nd Street.
Yeah, I remember when my dad would drive out to my sister's house. She lived out. Remember, I mean, Hefflinger Park, Hefflinger Park used to be a landfill.
Yes, it is. Yes. I remember driving when the West Road was being built, but even prior to that, to go to Boys Town was a brick highway.
Oh, really? Wow.
2 lanes. Yeah. I mean, 2 lanes, all brick.
That's crazy.
All brick.
Yeah. Wow. That's
I'm dating my age, man, but
all right. Paul, is there anything else that you would like to share with us, or any other questions in the chat that anybody can think of?
I would say if you're thinking about buying a house, get out there and explore it. Because yes, there's expenses to buying a house and upkeep, but when I sit on my patio or my deck and drink a cold one at the end of the day, especially after I've mowed or something like that, or I've tinkered around there and I look out around, it's very relaxing. And I say, this is mine.
Right.
This is mine. And it's mine. And I got a roof over my head, my family, and it's mine. And you can have it too.
Right.
You should explore it. And if it's not happening right away, don't be discouraged. It may and can happen.
Exactly. Now, what about folks that are concerned? Now, do you run into a lot of folks that are like, they're concerned that the market is overvalued and prices are going to crash? Do you have that conversation at all?
Yeah, all the time. We're not going to crash. You think car prices are going to go down?
No.
Here's the problem. The houses, and just like interest rates, I mean, we weren't building enough of them. And so now they're building them, but these prices we're having now should have been closer to this 5, 6, 7 years ago. But when the rates are so low, the government was subsidizing that.
Right.
And instead of, now all of a sudden they're up there, and the price of lumber and everything jumping. It should have just more in a gradual rather than all this big spike.
Right.
We're all living with that big spike. It's not going to come back down. Now, will it level off? Historically, houses have always appreciated 3 to 5%.
Right.
Now they're pretty much right at 5 to 7, so it might back down a little bit to like 3 to 7, but they're still going to go up. And I wish the taxes go down, but that doesn't seem to be happening. And now we're having the big influx with the insurance. So yeah, the calculus, but income is higher. I mean, it's never higher enough for all of us, but many families are 2-income families now, as opposed to our parents being maybe one. Mm-hmm. And my mom never learned to drive. Never learned to drive. When I came home from school, we had 7 kids.
Yeah.
I was always taking her over to the store.
Is that right?
One of my duties before I did anything was I went to the store and got it. And every Saturday morning, I took her to the store on our Saturday shopping spree, and we'd fill up two deals, and that was. Yeah, I was old enough I could pass it off to my younger brother. The prices of homes are not coming down, and income really isn't going down. It's steadily going up. So it's all kind of relative.
Yeah, I don't. Now could you have a market go down in some parts of the country? Absolutely, there could be some, but it won't stay down. It's not going to. You got to go into it with a long-term outlook and take care of the property, and that it takes money to take care of the property too. There's going to be maintenance involved. It's not like you buy a home and you don't have to put money into it. That's just part of the gig.
No, eventually, if you're there long enough, you're going to replace windows, roofs, painted a few different times. You're going to paint the inside. You're going to redo carpet, all that. All that stuff could have been done on your rental too, if your landlord does it. Other times, sometimes they don't do it, and guess what? You're left with disgruntled because I got holes in my carpet, and if you're not doing the lawn and he's doing the lawn, and it's nothing but weeds.
Right. No, that's yeah.
And the biggest driver in our neck of the woods here is the school systems, which are great. Right. They cost money, but the school systems and they're still, even if OPS, they're still putting money into those schools, even the older schools, and rebuilding and doing different stuff. Like, so that's all relative. It's going to happen. So if you're a first-time home buyer and you think you're going to wait till the rates go down or the price of homes come down, 30 years ago, the rates were at 6.5%, 7%, or 30 years ago, they were higher. They were in the 10s.
Right. I remember when my very first home, I paid 13%.
Mine was 13.5.
Yeah, and I was I bought my first home, Paul, and 13%. Right, I was living at home, and I bought a rental property while I was living at home.
Boy, your parents were very lenient, man.
I was so proud of myself. I was 21, and it was on Section 8. My renter was older than I was.
Oh, wow.
But she was a great tenant. She took care of the place.
And you had a great education, didn't you?
I did. Boy, I tell you what, that place, it was built in 18. I wish I should have watched a couple YouTube videos, because that thing was built in 1890. And I tell you, that thing was old. And, but I used to love, I used to, and I only paid 10 grand for it, but I was rented for $400 a month. Okay. And my principal, interest, taxes, and insurance for that property was $135 a month.
Wow.
And I was mowing grass living at home. And so I paid it off it didn't take me long to pay it off because I was,
you didn't have a housing expense.
Yeah, I didn't have
but you didn't have a housing expense.
I didn't. I didn't aggravate my parents though either, but
yeah.
But my dad I would argue about stuff, like he was like, "Oh, don't buy that thing," or whatever. And I'm like, Dad, I'm not going to listen to you." But I should have listened to him. The older I get, I'm like, the more I think back, I'm like, "Oh, that guy was a genius."
Yeah.
But boy, exactly. At the time, I was like, "Oh no, Dad, this," that didn't. Yeah, that was my first home, but it worked out okay. But you learned a lot being a landlord. That thing was that house was not well. I mean, it was 1890, so this was in the 90s, and but boy, I got a real education on that, and that was the days that was before they did home inspections back in the day.
Like yeah.
And then when I went to sell it, that's my first experience with a home inspection, and I was like, holy smokes! I was one of those sellers that stood around, and this was before I was licensed and everything, but I remember being at the home inspection, watching them, and I'm like, God, watching them prod and poke at things, and I'm like, oh my gosh, it made me nauseous just thinking about it.
Yeah,
but yeah, no,
it was an education, wasn't it?
It was an education. Well, Paul, if folks want to reach out to you, they can go right to your website. And hey, we got Fred Sacco. It's David Matney. Fred is a friend of mine from Corn Nation. So if you ever watch Corn Nation, the YouTube channel and the live stream, Fred is absolutely hysterical to watch. So Fred, welcome to the program. Thanks for joining us tonight. But Paul, I tell you what, I really appreciate you being on the program tonight. And folks can reach out to you. And we learned a lot about USDA programs. And gave us some great information. So I really appreciate that.
You bet.
And folks want to reach out to you, they sure can. And you have a great day, and we'll have you on again.
Okay, Dave. Take care.
All right. Thank you, Paul. I appreciate it. You betcha. Bye-bye. All right, everybody. Well, hey, any last comments or questions? All right. Okay. The reason we can't have nice things, got to get back to my dogs. Have a good one. Thank you, Fred. All right. Terrific. Well, hey, everybody. I tell you what, I appreciate you joining me on the stream tonight. Go ahead. If you're let me pull up, got one thing to share with you here. See if I can pull this up here real quick. Clark, the realtor, if you can help out my friend Clark, he's almost at, let's see here. Clark from Atlanta. Help out my buddy Clark. He is at 994 subs. So if you can help out my buddy Clark, and I'd love to get him over 1,000 subs. So anyway, everybody, Clark, I always appreciate you being in the stream, and MLH08 and Zaretha, thank you very much. Monica, thanks for stopping by this evening. But give Clark a sub on that. And anyway, I appreciate everybody, and we'll have another show next week. So you guys make it a great day. Bye-bye.